Good afternoon, everybody. It is Sunday, May the 15th, on a beautiful Sunday here in Toronto. I hope everyone's enjoying their weekend, but let's get started. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview for the week. All right, everybody. So first of all, as usual, thank you very much for tuning into the channel. I hope you like the information that we have today. If you do, please feel free to subscribe, like, share, and most importantly, comment. I'd love to hear what you have to say about the markets. But let's get started by looking at last week. So last week we saw a tremendous amount of volatility continue right throughout the markets, and typically, I would say that that's a bad sign, especially as we saw continued losses for the most part of the week, at least until about Wednesday, where even though we were still in the red for Wednesday, Thursday, we saw something that I've talked about a couple of times here throughout the week, and that is the increase in momentum or buyers coming in and adding support to the Dow and the S&P 500 in particular. So the main one I wanted to talk about is really Thursday, because Thursday is when we saw the biggest push, with the exception of Friday, but the biggest level of support and push here, where we can actually see the buyers coming in, buying the dip, adding support to the S&P, and moving the markets, or preparing it at least, for Friday's wonderful push to the upside. And in particular, if we take a look at Thursday during the last power hour or the hour before closing, that is when we really see that big several hundred move from deep red, finishing nearly positive for the S&P, nearly positive for the Dow, and tech followed right behind. Now, taking a look at what happened Friday, right across the board, all equities markets were actually moving well into the green, and they continued to hold that throughout the day. We really saw a little bit of a pullback about midday, and that brought us down to about 250 points in the green, but by the end of the day, that was wiped right out and moved well into the green, closing everywhere about 400 and change, pretty well right across the board. Now, we did have some big moves from the 10-year yield to the upside on Friday in particular, but to me, that was a very positive sign. That was a normalization of the 10-year yield, meaning it's just moving back to its position where it should be based on pricing factors, especially knowing that we are going to see additional increases from interest rates and the Fed. Now, the yield is going to probably move back up above 3, probably get up to maybe 3.25. I don't see 3.5 yet. It very well could, but just not yet. Now, part of the reason for last week's volatility is still continued fears that the Fed is going to be overly aggressive, even though Powell did come out and say that they don't anticipate, at least for the next two raises or meetings, anything above half a point. And even, in fact, this week, Tuesday, I believe it's Tuesday, we do have Powell coming back out, and he's probably going to reiterate, it is Powell at 2 o'clock Eastern time. He's going to come back out and probably just, again, reiterate that they're not anticipating more than 50 basis points per raise, and so the next two meetings. And if you followed me long enough, you know, even with the 2-point increase, or the 250-point increases, it's nothing to really be concerned about. In fact, the Fed really doesn't have the intention of battling inflation. Otherwise, these increases would be significantly more aggressive. In fact, what ends up happening is this pushes inflation higher, or at least maintains status quo. We will not see the 2% inflation rate that the Fed always targets. Now, taking a look at what's going to happen this week and what we need to see, because I've been getting a lot of messages from people asking me if I am calling a bottom here. And I don't call bottoms. I really focus on momentum changes, and I really focus on the 10-year yield more than anything else. So in other words, even if we don't get confirmation that a move to the upside is there, whether or not the 10-year yield moves in an aggressive fashion to the upside. If we start seeing those big jumps that I talk about, 3%, 4%, 2% on a daily, multiple sessions, then we know that there could be a coming implosion of the debt market, which means that there will be the implosion of the equities markets soon to follow. And if that does happen, there will be no safe place to go. And we can see a very significant correction, and we're talking about an excess of probably 50, 60% clawback or a reversal in the markets here to the downside. Now, this week, what we need to see in order to know whether or not momentum has truly changed and shifted from a downside momentum to the upside is at least Monday's session needs to be a strong buyer's entry. In other words, we really need to see the buyers moving in, pushing the markets upwards, having a wonderful rally to the upside. Again, 100 points doesn't really cut it. It really needs to be a little bit more aggressive than that, in my opinion. Ideally, if we get a secondary run on Tuesday as well, that would be even better. Following the increases, even if we don't get Tuesday, but we at least get a solid rally on Monday, we do need to see a little bit of a pullback. Every time we get a little marginal pullback without erasing all the gains is actually quite bullish for the market. So we'd actually see a nice rally from there, and it could eventually mean that the end of that downwards movement or downwards momentum is completely gone. At least for the short term. And that's what we're looking for. So we're looking for a rally on Monday, ideally another rally on Tuesday, possibly a pullback or a little bit of a correction on Wednesday or Tuesday. So either day. Tuesday's a little bit up in the air. For sure, we need to see a rally on Monday to at least feel a little bit more confident to the upside momentum shift. Now, taking a look at precious metals here. Precious metals were under quite a bit of pressure coming out of last week, with gold finishing just over $1,800, silver finishing just over $21. Now, I think for the short term, we'll probably see continued pressure here. I don't see either metal really moving, gold moving up to the 1900s or silver pushing up 23, 24 bucks. I'm just not seeing that, even though yesterday or at least I believe it was yesterday or the day before, was the silver buying National Buyer Silver Day or something to that effect that I've seen a lot of other YouTubers talking about. I really don't anticipate that that's really going to impact the overall metals market all that much, even though last year, February, the Wall Street Silver Group and their buying momentum did actually impact markets. I don't think it's going to have the same impact this time. I'm not a big proponent of that in any case. But I do still see a little bit of downside pressure here. However, I'm still quite bullish on the metals, commodities in general. Energy did exceptionally well. We're taking a look at crude. Crude continues to push higher and higher. I do see it moving and sustaining itself above 110, certainly over 100. And this is only just getting started, as there's been some news last week in regards to Biden and pipelines. But in any case, we won't focus on that. But for sure, we will see a continued upwards movement in crude and commodities as well. Maybe with the exception of livestock. Livestock does tend to move a little bit downwards. However, overall commodities should continue their upwards trend. Taking a look at cryptocurrencies, even though today Bitcoin is currently sitting over 30,000, currently sitting at 30,232, Ethereum currently sitting over 2,000, approaching 2,100. Still, not a lot of positive news really to push cryptocurrencies upwards. Instead, it's more of just a following suit with the rest of the market. Now, overall, I do think cryptocurrencies will continue to move to the upside, or will return to the upside. It's just a matter of time. However, I really don't see that happening in the immediate future. But long term, I am still bullish on crypto, at least for now. But that's pretty much it for this week. We do have some big retail numbers that are coming out. We do have some reporting coming out this week. Big days to look at, or each day what we're going to look at. Monday, not a heck of a lot. We do have U.S. housing starts. That's an important number. Core retail on Tuesday is actually going to make a big difference, especially since on Tuesday later on we are going to have FOMC and Powell speaking. Taking a look at Wednesday. Wednesday we'll have building permits, which is important. And in Canada, we do have CPI and crude numbers as well in the U.S. Thursday, another big one with initial jobless claims. But we'll focus on everything throughout the week on its daily at my wrap-up for every day. But until then, I will see you tomorrow morning at the opening bell.